everyone, and thank you for joining us for this economic impact with our chief economist of National Bank, Stéfane Marion. Thank you, Stéfane, for joining us again this morning.
Thank you, Denis.
Well, you know, we since the last time there was a few news again in the economic environment. A lot of things happening. Some are a bit of the same, but others are different. And today we will chat a little bit with some economic news, but also variables and data that will help you probably to understand a little bit more what's going on out there. But first, let's see what happened to since the last time about the return on the equity across the planet and also on the bond market. As of so far, what we can see is that all the return on those assets are in the positive sector, but the second quarter was kind of tough. And can you explain that, please, Stéfane?
So it is true, Denis, that on the right-hand side of the red bars on that chart shows that it's positive returns across the board for financial markets. But you're right to say that the second quarter is a little bit more difficult, a bit more volatile. Uncertainty versus, with respect to the geopolitical backdrop, the banking sector in the U.S. But note that it's encouraging to see that the Canadian index continues to play a defensive role. The S&P/TSX is actually up almost 3% this quarter. And that reflects the fact that, it's a more defensive index, and particularly the gold sector has done relatively well given the current uncertainties. So year-to-date, positive performance, but it's a bit more complicated in Q2. And I think that the second half of the year is going to be volatile again, a little bit more complicated, Denis, because we still have to deal with the ramification of the interest rate cycle, which is probably coming to an end. But the impact of previous rate hikes has yet to be felt on the economy, both in Canada and the U.S.
Yeah, talking about interest rate, what do we see from the Fed and the Bank of Canada so far? It seems that we reach a plateau. What do you think?
I would say that when we look at it, Denis, we've never seen a tightening cycle as impressive as what we've seen over the past year on both sides of the border. The good news is that the Fed is now talking about pausing, and Canada has done so since last January. And I think the argument for pausing now, I'm not talking about rate cuts, that's going to take a while to come. But in terms of pausing, it can be justified on the fact that inflation is decelerating quite rapidly on both sides of the border, below 5% in the U.S. It's actually close to 4% in Canada. So central banks are justified to take a pause given the inflation backdrop.
Yeah, thank you for that. And, we always look at the bank sector. I think it's in the newspaper almost every day. How does it look so far? A few weeks passed since the last, impact economic, video that we did. What's happening here? Can you tell us more?
There's still stress on the regional banks in the U.S. And one way to illustrate this, Denis, we had yet another failure at the start of the month with First Republic. So we have 3 U.S. regional banks that have failed so far this year. And the assets that were associated with these failures is roughly $550 billion. Compare that with 2008, 2009, 2011, during the period of the great financial crisis, there were more than 400 bank failures in the U.S. back then, Denis, but the assets that were impacted were at roughly $680 billion. It's just to say that we don't have as many failures this time around, but they've been bigger. So that is clearly a point of contention for the Fed. And that's also part of the reason the Fed is saying, I need to pause. I need to assess the impact on financial markets, on the banking sector of what I've done so far. So again, these failures will mean that there will be more regulations coming on regional banks in the U.S., more tightening in lending standards, less credit available in the second half this year, and probably less economic growth. So again, things are not as bad as what they were back in March, but we are still not out of the woods with respect to the impact of these failures on credit availability for the U.S. economy for the second half of this year.
Thank you, Stéfane. That slide is kind of shocking when you compare, those two periods, and you see the numbers of failure versus, the amount. It's unbelievable. Another story that now it's popping up, and almost on a daily basis, is the debt ceiling. And once again, almost every 10 years we had, that debt ceiling that is coming back and hunting us. How does it look?
Denis, people are more concerned than they were in 2011. If you look at the CDS, the cost of insuring against a default of a sovereign government, the U.S. Sovereign government, you can see that the price of insuring against a default is much higher than it was in 2011, and that has undermined the U.S. dollar. That is creating some uncertainty for markets. Denis, to be honest, this chart looks quite impressive, but nonetheless, the probability associated with a default is at no more than 5%. So I don't think it should be a baseline scenario. This is something that is making markets nervous at this point in time, but I doubt very much that we're going to see a default. A potential derating is still possible later during the year, but default, although the fears are greater than they were in 2008, 2011, I think is quite low in terms of probability. So we put them at 5% at this point in time.
Yeah. Anyway, we're okay. Joe Biden says this morning there will be no default. Then he must know. He's the guy in charge of the country. Then hopefully he's right, and we'll see how it's end up. But usually it's always at 5 before midnight that things are approved, and we're good for another 10 years. Then. We'll see. Back to Canada, the banking sector, once again, a lot of question around it. I think we have a few data to give you and to picture how the banking sector in Canada looks like. Deposit, name of the game. Is there any change on deposit, Stéfane?
Oh, listen, from a Canadian perspective, and by the way, Denis, you're absolutely right to say that for a president that's trying to be reelected, defaulting on your debt will be a total nightmare. So I agree with you that they'll find a solution. But in the meantime, in Canada, we haven't seen contagion to the banking sector. We spoke about this last time. The Canadian environment is much different from the U.S. It's a system that is less available to outsiders. The payment system is more closed. There's no leakage from money market funds. And at the same time, Denis, what Canada benefits from that other countries are not benefiting from is this continued surge in the working age population. And this is an update. And when you consider that the 81% of the working age population has a relationship with a financial institution versus only 66% in the US, the population, the demographics will impact the deposit base. So 81% of a rising population, working age population, big impact, Denis. And now I'm going to give you the number on population growth for the first 4 months of the year, close to 280,000 individuals. So 81% of that having a relationship with a financial institution is just putting a boost on the deposit base. So this is something that other OECD countries do not benefit from. I understand that surging population growth is having an impact on the availability of absorption when it comes to the housing sector. But from a financial institution backdrop or perspective, this is actually a main positive to boost the deposit base that is unavailable in other countries. So again, this is where demographics has a huge impact on the financial system in Canada.
Yes, and you're truly right. And you can see that also when you compare the profits from Canadian bank versus the U.S. bank. And I think you have a bit of data on that, and that can give you confidence also how strong is the banking sector in Canada.
Well, it's funny, Denis, because when you speak to investors internationally, they say, where are the Canadian banks finding their deposit base, or how are they finding new clients? Well, it has to do with the surge in population. And at the same time, this surge in population, increase in deposit base, also allows the economy to have a more a healthier credit cycle than what we see elsewhere, and that obviously is having a big impact on earnings per share for the financial sector, which is nearly tripled since 2006 in Canada, and while in the US it's up 40%. So you can see that there's divergence between Canada and US in terms of EPS. It's not because Canadian banks are taking more risks, Denis. It's actually the net positive coming from this population surge that is increasing the demand for deposits, lending conditions, household formation, and obviously a stronger economy.
Well, thank you, Stéfane, and thank you for those very interesting comments about first the U.S. economy and the Canadian banking sectors. I think it can give us, kind of a comfort about, in what type of environment we are. Hopefully, it's helping you to take your decision of investment for the future. And once again, thank you for joining us for this economic impact, and we'll see you next time. Thank you, Stéfane. Au revoir.